Ladies and gentlemen, thank you very much for your time this morning. My name is Ramah Nyang. I'm a Kenyan business journalist. I operate here in Nairobi. You can read some of my work on Bloomberg. You can watch it on CGT and Africa pretty much every evening. Why are we here? In the next hour or so, we're going to be exploring the benefits of operating from special economic zones. And one of the fascinating things about the prep work that went into this specific session that we're going to get into with Justus Kariuki, who is the Chief Operating Officer of the Two Rivers International Finance and Innovation Center and the SEZ, is that the law actually enabling this has been on the books for quite a while, since 2015, as a matter of fact. But in daily discourse with business people, in daily discourse with policymakers, we rarely ever actually get into the nitty-gritty details of exploring, hang on a minute, we've got a special economic zone, we've got the enabling legislation on our books, but what benefits does this actually offer to individuals who want to operate in those specific areas? How do we get enterprises in there? How do we use them to power the next phase of growth for the Kenyan economy? How do we use those to attract a lot more capital to flow to our little corner of East Africa? We'll be exploring all of those issues in detail between now and 10 a.m. In the meantime, if you'd like to fire off questions, comments, views, feedback, there's a little Q&A button at the bottom of your Zoom panel. So please send in your questions over there, and Justus and the team at Two Rivers, of course, will be more than happy to attend to those specific questions in the course of the hour. So, as I mentioned a little earlier, let me bring in my guest. Justus Kariuki is the Chief Operating Officer of the Two Rivers International Finance and Innovation Center and Special Economic Zone. And he's got experience on both sides of the fence, as we like to say in this part of the world, both in the public sector and in the private sector. So he's seen how the policies are made, and now he's on the other end of matters, essentially telling us how, the policies that he's seen made are working out. Justus, welcome to the program. Thank you for your time this morning.
Thank you, Raman. Thank you for having me.
No worries. Thank you very much for making time for this. In fact, that's the reading up on the legislation was probably one of the more fun parts of this entire event, because in as much as, yes, I've been a business journalist for quite a few years, I didn't realize that this is a law that has been on the books for almost 10 years now.
Right.
It's an incredible amount of time. But let's start with the main reason why we needed to set up legislation to cover SEZs. What are the pain points that were being addressed here?
Thank you, Rama. Maybe for context, at the very initiation of the policy, the enabling policy towards the enactment of the Special Economic Zones Act was an objective by government to attempt to bring in what we call foreign direct investments, attract foreign investors to bring their businesses and bring their capital into the country in a bid to spur economic growth, to create job opportunities, and sort of give Kenya a push by way of having new capital that we've not had or we've not been able to attract for a long time. And when you talk about attracting investors from other zones, you're basically going on a journey to try and move businesses from their jurisdictions of comfort, from their jurisdictions of convenience, and then finding out what exactly their businesses need, and then creating an enabling environment for them to feel enticed and to feel interested to sort of make the big move to another jurisdiction. And by this, we are basically looking at what is pertaining in the rest of the world. What is the cost of doing business? For example, how expensive is it for you to run your business in one jurisdiction versus another jurisdiction? And it's a serious pain that the Special Economic Zones Act attempted to cure by creating an environment where the cost of doing business within Kenya would be cheaper. We'll be able to go into the details later. Then we're also looking at the cost of financing. When you are telling me to move my capital from Europe to Kenya, whether it's equity financing or loan financing, what is the cost of that movement, and what does it mean for me and my business? Again, it's also a point that the Special Economic Zones Act attempted to cure. Then there's also the ease of capital repatriation. Ramah, you must have seen and must have read in the news late of companies, especially Kenyan companies, that have gone into even neighboring countries and they have done business. They've made their money. Your money is in the bank there, but you can't bring money back home. That's a serious concern for many investors. And again, the Special Economic Zones Act has looked at this pain and tried to redress it in a way that makes sense for those with capital wishing to bring it over. Then there's also the question of protection of business profit. In other jurisdictions, they entice you to come and set up your business, you make your profits, but then the onslaught on those profits by the taxman in those jurisdictions is at another level. And so the question that anyone wanting to invest in a new jurisdiction will ask themselves is, if I make my money, will I have my money, or I'll lose all of it to some tax vultures or something like that? There's also the other question of exit. You're removing me from Asia. You want me to come to Kenya and set up my business. Then how easy will it be for me to exit without a lot of pain? And the SEZ Act has also attempted, and these are the things I think, Ram, I hope we will be able to cover them in detail as we move on, so that then we get them. But then more importantly is companies that have existed for a long time. They have built a human capital portfolio of experts who, if they were to relocate, they would need to move with them. And then the begging question is, if I am moving my business to Kenya, am I able to bring my workers, my experienced staff, people with a history of the business to the country where I'm moving to ensure business continuity? Then the other serious issue, which I think we should also be able to address later, and I hope we will be able to handle these one by one, the question of what we call the ease of doing business. It is not uncommon to find too many bureaucratic bottlenecks in especially the African countries and in other less developed countries where you want to set up. The process of getting even a license, so being able to get a business permit, becomes so bureaucratic, so much so that nowadays we talk about which country is easier to trade in and which country is more difficult to trade in. There's an ease of doing business index that countries and investors really love falling back to whenever they want to move capital. So these are some of the issues, Ramah, that the Special Economic Zones Act has attempted to address, and a deep dive into the framework will be able to show how this has been addressed through the Act. Okay,
so let's work through those the incentives that you've essentially, or rather the specific pain points that you mentioned. The regulatory environment, the financial incentives, the ease of moving capital in and out of specific markets. How does a special economic zone like TRIFIC, for example, how does that affect or rather solve the specific pain points that we're dealing with? And if you can explain that in the context of a company that's already done that, that will be fantastic.
So this has now been done. And from many years of speaking theory, we are now at the point where we're able to point out that this is actually happening. This has been implemented and implemented successfully. We look at the cost of doing business, for example. Companies and investors particularly want to see whether it will be cheaper to do business from a cost perspective on a day-to-day basis. How that reflects or how that looks when you're in one jurisdiction versus when you're in another jurisdiction. If you were to Google Kenya and look at the tax regime and in terms of how it impacts on your doing business, on your cost of doing business, you will find that the SEZ policy has deliberately carved out a very enabling framework to make it cheaper to do business within the SEZ through very specific tax incentives. When you move into a special economic zone, the government has carefully allowed you to enjoy a zero rated value added tax, which means for all your inputs and consumables, when you make those purchases, you actually enjoy zero value added tax. Now that makes your input 16% cheaper as opposed to when you are operating outside the special economic zone. And the story becomes even sweeter if the bulk of your inputs and business consumables and services are imported. Because when you make those imports, your imports are 43.5% cheaper by virtue of the removal of import duty on all imports by special economic zones and the removal of VAT on imports of 16% and the removal of import declaration fees of 2.5%. If you sum that up, it comes to about 43.5%. And that means when you are in the zone, as opposed to when you are outside the zone, your cost of operating is 43.5% cheaper. And then when now you sum this up, you want to see the impact when you are in and when you are out, then it incentivizes the person who has a business outside of Kenya to actually want to come and domicile that business within the special economic zone. The zero rating of value under tax also allows, and Ramah, there's this claim, and this we have encountered it in the course of our conversations with clients when they say, no, but when you say VAT is zero rated, it has no effect because I'll be able to claim this back when I sell my goods and services. But Ramah, I don't know that you have seen the pain of trying to follow up on VAT claims from Kenya Revenue Authority. Now, that pain...
Been just a stack of VAT refunds that they have to process, some of which go back years and years and years. It's a real problem for a lot of enterprises.
Now, the SEZ environment relieves you of that pain. But other than relieving you of the pain, it also allows you access to cash flow. Cash flow, which would have been stuck in KRA for so many years, is cash flow that becomes immediately available for your business operations and business expansion. So from that angle alone, Ramah, the cost of doing business within the zone is deliberately made easier as an effort to increase the appetite of foreign investors and investors with an export appetite to actually come and domicile within a special economic zone. And that allows the businesses to be able to expand and to grow and become globally competitive. But when we look at the cost of doing business, there is also the cost of financing. Ramah, if you're bringing your capital from another jurisdiction, chances are either you have borrowed that money or that money is coming from your sources as equity. Now, if you have borrowed that money, at the point of paying interest, the Kenyan tax system imposes a withholding tax of 15% on interest repayments. Now, the SEZ law has deliberately removed that pain from people who want to borrow money overseas, bring that borrowed money into Kenya for purposes of investment. At the point of repaying that money, now that withholding tax on loan repayment is deliberately removed to make it easier for you to come in without feeling like it's a punishment coming to Kenya. When you choose to bring in your equity, and at the end of the accounting period, you want to pay your dividends to your shareholders or to yourselves. Again, the SEZ Act has made it very easy for you by removing what we call withholding tax on dividends. So the taxman comes to you, Ramah, when you have made your profits and you're declaring dividends at the end of the period. Now, that dividend attracts a withholding tax of 15%. The SEZ framework comes to you and tells you, now, look, you brought your money, you've made your profits. You can take back your profits at no cost to you. And I don't know that the picture is coming up clearly.
Well, yeah, it does, actually. And it sort of leads me into my next question, because, looking at the way we've been framing this conversation so far, Justus, in some ways, we've been essentially aiming it at saying, look, this provides significant benefits if you're bringing in capital and bringing in expertise from outside the country. But there's an interesting question that's come up in the chat. Well, this question didn't identify himself or herself, but nonetheless, the question I think is especially important. And this is it. Can an existing Kenyan business move into a special economic zone to take advantage of the SEZ benefits? And it's a valid argument that they're making because, we're saying, look, we're trying to do all these things to attract a lot of foreign capital. What about businesses that already exist within Kenya? Can they take advantage of the benefits offered by a special economic zone?
Ramah, the answer is a strong yes. It's in the affirmative. And the decision to come into a special economic zone or not should be informed by business logic. Any investor is looking to make a return on their investment. Now, the catch, and this was going to be my way of just summing it up later when we finish, but I'll bring it up now. When you move into the special economic zone and you have appetite to sell to the local market, whether it's goods or services. Now, the tax laws require you to pay the full taxes for the goods and services you sell to the local market. Now, but if you are a local company existing, even if you have existed for a century, but you have a significant portion of your business being export business, then the time to go into a special economic zone was yesterday, because then you're missing out on the chance to become globally competitive. You're missing out on the chance to expand to the rest of the foreign market, and you're missing out on the chance to make use of the facilities your government has put in place to actually put you out there to become competitive. So yes, come into the special economic zone. We are able to have a conversation and help you structure your business in a manner that makes it compliant in terms of licensing requirements.
Indeed, and I'm sure we'll get contact details for you and your team a bit later on, and probably put them into the chat so our audience can have that. But given the benefits that you're talking about, what is it that limits the number of SEZ companies that are operating at the moment? Because I guess the question then would become, anyone listening to this would say, look, we're hearing an interesting set of incentives here that anyone who's operating an export-oriented enterprise should be really, really interested in taking advantage of. But, and I could be wrong on this, from my knowledge, there are not that many companies that are taking advantage of these specific provisions under the Special Economic Zones Act. Why is that?
So, Ramah, the SEZ Act has gone through the baby steps. Maybe we are only guilty of growing too long and not being able to work faster than we should have. But from my personal experience, having been in the SEZ environment for a couple of years, spanning almost 5 years now, there has been an undue focus on manufacturing and logistics as the anchor business activities for special economic zones. And one of the results of that focus is the lag time is too long. Ramah, it takes a manufacturing entity at the very minimum 36 to 48 months to relocate a business from one jurisdiction to another. You're talking about moving machinery, you're talking about moving technology, you're talking about changing your supply chain for your raw materials, you're talking about changing your distribution channels for the finished product. It's a lengthy process. And for a long time, we've had this idea of just doing industrial parks as a basis of our special economic zone regime. That should never have been the case. When the framers of the SEZ Act in their wisdom, put out the law, you will see that there are about 10 schemes that are eligible for operating within a special economic zone. Industrial parks are just one of them, and logistics parks. You will notice that TRIFIC SEZ is the first business services only special economic zone. And we took advantage of that gap so that we can fast track the efforts of the national government to bring in foreign capital by targeting the sector that moves faster. For a services business, Ramah, it is easy for you today to relocate your services business from the US to Kenya and be operational within 1 month. You cannot say that of a logistics business or of an industrial park. And this is the narrative that TRIFIC came on board to try and change. It was uncharted territory. We took the bullet. And you are able to see as we speak, whereas from 2015 up to last year, from 38 special economic zones, there were less than 50 gazetted, licensed special economic zones enterprises. TRIFIC SEZ is just about 1 year old. And Ramah, we already have 14 companies licensed, and we have just about 20 others being processed for purposes of licensing. So in total, in 1 year, we're talking about 34 just from one zone, just for running a services business services special economic zone. But the other challenge, which again I would speak out of information and experience, is the appetite also by special economic zones developers to only focus on having land gazetted and then offering this land as the basis for investors to come into the country. Today, Ramah, few people want to buy land and start building business premises. It's capital intensive. You need a lot of money to come buy land, put your money into brick and mortar, put your money into fit out, put your money into infrastructure. And we chose to do it differently as a special economic, as TRIFIC special economic zone, because this has been tried and it's not working. We gazetted an environment where we are providing business-ready environment. Plug and play. You come today, you qualify, you sign up, in a month, you're good to go for your business. And this, we've seen, has actually been a transformational point for the special economic zones regime in Kenya. And so in a direct answer to your question, Ramah, I would attribute those 2 points. One, the focus on the wrong sectors, not really the wrong sectors, but the failure to focus on the fast moving, what I would call the FMCG component of the special economic zones, and just focusing on the classical traditional manufacturing angle of a special economic zone. And then the second angle is the failure to provide a ready environment for multinationals to be able to move here quickly. Ramah, if I could give just a small statistic, did you know that in terms of FDI attraction in Kenya, the services sector alone has brought in about 59% of FDIs into the country? And manufacturing is not even second, it's not even that. I think it's about 4. Because below services, we are talking about wholesale business and retail businesses and all that. And so in terms of moving the economy forward, we probably were focusing on, we're backing the wrong horse. And then secondly, did you know that the services sector contributes to about 51% of the employment opportunities in the country? TRIFIC is just starting. As we speak, we are talking about more than 10,100 jobs already pledged by the entities we are licensing at the moment, and we are just starting.
That's a mix of the 14 that you're speaking about and the ones that are already operating.
Correct. So that should answer your question.
Yeah, it certainly does. And just to your point a little earlier about the sort of economic zones that have been, that are essentially permitted under law, if you actually look at, just for information for our audience, if you're looking at the sort of special economic zones that are essentially available under the Enabling Act, it's a whole host, right? You've got free trade zones, industrial parks, free ports, ICT parks, science and technology parks, also part of that legislation. There are agricultural zones that are also an option, as well as tourist and recreational zones. And of course, TRIFIC falls into one of these categories, business service parks as well. But that leads me to my next question. There's some who'll be in our audience today who are listening to what we're saying and saying, okay, this sounds interesting. If I want to essentially set up shop within TRIFIC, for example, how easy is it to obtain that license, and what requirements do I need to qualify for?
Ramah, that's a good question. And thanks to the new regime at the Special Economic Zones Authority, hats off to the new board and the new CEO and the staff, it's now guaranteed that inside of 30 days, you can apply and get your SEZ enterprise license. And the 30 days is on the higher side. But I dare say that the 30 days count from the date you supply all the information required to support your application. Ramah, I want to give you an example. Yesterday, we made an application on behalf of a global client. Yesterday around 11 a.m. By close of business, the Special Economic Zones Authority had referred back to us with an approval to progress to the next stage. That's the new efficiency we are talking about. The efficiency to dispense and decision. As to whether the decision is right or wrong is another thing. That's refining the process. But the fact that you can actually submit an application and get a feedback the same day, that's something I want to sort of give my claps to the Special Economic Zones Authority. But if you are interested in coming in, then what you need to do is put your house in order. Make sure the entity you intend to license is fully compliant, and particularly tax compliant. And we've had back and forth with quite a number of companies, some of those that are still in the pipeline, where you apply, but then you've not been tax compliant, both as a director and the company itself. So you need to make sure that all your KYCs are in order. Ensure you have a company PIN, your certificate of incorporation is there, you have your tax compliance certificate. You're coming into a preferential trade area where you'll enjoy tax incentives. So you cannot transition from a regime where you are not tax compliant to a regime where you want to enjoy tax incentives. But not only does the company require to be compliant, the directors as well require to be fully compliant. So for each of the directors listed on the CR12, there is required to be a tax compliance certificate and other KYCs, including a bank reference letter. The Special Economic Zones Authority wants to know whether you are bankable. If there's no bank, if no bank will accept you, then why should a preferential tax area like a Special Economic Zone also accept you? So they want to ensure you have bank reference letters, you have TCCs, you have your PINs in order. And then, of course, to avoid also briefcase companies and people hiding behind others, SEZ also has introduced the requirement for you for every company to show the ultimate beneficial owners. So that if Ramah, you have a company, you don't want to come out as the owner, so you're using me, I should be able to declare. And that's now law, and under the business registration regime, you need to actually declare who the beneficial owners for each business are. So with those, you should be able to just come in, make your application, and get your license within no time.
Indeed. I just want to bring in one more question that's coming up in the chat. Just a small reminder to anyone in the audience. If you've got questions for Justus, the things you'd like us to clarify, there's the Q&A button right at the bottom of your Zoom panel. So you can essentially fire off a question in there for us. Here's one for you. Service industry is now used to a much more flexible working model. Can consultants of a business set up in the SEZ work partly from home and partly from the office that's set up in the Special Economic Zone?
That's a good question, Ramah. But the answer to that question is in the law. The law says an SEZ is a geographical location where businesses are undertaken in a business enabling environment. The contemplation of the lawmakers is that you are working from a special economic zone. So the business may not be a factual business, but as to whether the employees of that business can work from home, certainly we do not have enough policemen to ensure that you do not work from home, that you do not carry your laptop from home and log in and work and do your stuff and all that. But the business location and the business center of operations need to be and must be at the special economic zone. I think that's an enough, so that we also don't over-legislate or overread what the provisions of the law are.
What sort of enterprises qualify to set up shop in the SEZ? Because, you know, if you just look at the straightforward reading of the type of special economic zones that are contemplated in the Act, right? They just say a business service park. And that could mean a whole lot of things, right? It could be business process outsourcing. It could be setting up a financial firm, like, say, for example, any of the big four setting up shop there because they're servicing clients within the region and so on and so forth. Are there any specific limitations on what businesses qualify to be within the special economic zone?
Ramah, there are limitations. The first limitation is technical, in the sense that it speaks to you as an investor. Does it make sense for your business to be within a special economic zone? Does it make sense for you to come into the zone, pay all the taxes, pay all and sell to the local market and pay all the taxes, and subject yourself to unnecessary scrutiny and regulations? So ideally, and what I'm driving at is, if your business has no appetite for export market, then the best thing to do is to keep away from a special economic zone, because it will just be an unnecessary distraction to the way you do business, the compliance checks and all that. However, there is a category of businesses that may not be licensed by the regulator. The SEZ Act contemplates that there shall be a negative list of activities that may not be allowed to do business within a special economic zone. A cabinet secretary is required by law to gazette that negative list. The last negative list that was issued contained activities such as second-hand clothes. For example, you cannot bring in second-hand clothes and take them onto a special economic zone and all that. It included activities like gambling. So you cannot come and bring your casino and any other gambling activity into a special economic zone. It involved also products such as ammunitions and other products that require security clearances or special clearances for you to be able to trade in them. So there is a lot of clarity in what business may not be allowed within a special economic zone. And what would be a good way forward on that question is, if you are not sure whether your business qualifies for licensing as a special economic zone enterprise, then the best thing is to knock on the doors of the Special Economic Zones Authority, or come to us at TRIFIC SEZ, come to me. We will be able to interrogate your business and give you proper advice. We are also able to help you to structure, to sort of have an interrogation to determine whether indeed it will be profitable for you to domicile your business within the zone. And Ramah, it's been the most painful conversation for us at TRIFIC. I think in our first 2-3 months, we had conversations with nearly 300 businesses. And you know, we're in business, so it's very painful to spend 2-3 hours with a client and you have to give very honest advice. Look, bro, you don't qualify. We needed you, but we can't have you because that's the law. And so that's how it is.
which is entirely understandable. There's another question that's coming in for you, actually. I think this is a follow-up to the requirements question that we discussed a little earlier. This is from Tim Stemos. Apologies, Tim, if I'm mispronouncing your surname here. For the KYC requirements, what if the directors or the shareholders are not in Kenya? Do they need equivalent documents from abroad, say like a tax compliance certificate from, for the sake of argument, authorities in the EU, or bank reference from a bank that's based in those jurisdictions? Or does it have to come from Kenyan authorities and Kenyan banks?
Indeed, Ramah, and I dare say the application we submitted yesterday, and it's a foreign company. And among the documents we have to procure to submit together with the application are tax compliance certificates and KYCs from the foreign jurisdiction. And why this is important, that it's good that it comes on record, Ramah. You've seen many countries entering the gray list for non-compliance and lack of transparency in the conduct of business, lack of transparency in the way we do our stuff in the money market world at all. And we have to be sure, and the Special Economic Zones Authority has been very categorical, and for that, we support them 100%, that Kenya has no space for dirty money. So if you're saying you are bringing your investment from Bulgaria, from whatever country, you have to demonstrate, one, that you have that money, two, that money is legit, three, you are a legit trader. You pay your taxes in the jurisdiction you're coming from, and that your business is actually tax compliant. You don't want a situation where companies that have been rejected in other jurisdictions then end up coming to Kenya. But we help companies understand this and to comply so that we all are on the same page.
Sorry, this is now a personal follow-up, because I've just thought about this as we were speaking. With respect to how companies would set up shop here, for example, if someone says, look, one of the shareholders here is, for the sake of argument, a company that's based in British Virgin Islands or the Caymans, or it's an entity that set up shop in Mauritius. If there's a chain of subsidiary companies that are being held, in order to essentially qualify to operate in the SEZ, we have to essentially demonstrate who the ultimate beneficial owner of all of these entities is, regardless of jurisdiction.
Not exactly. The UBO regime is Kenyan specific. So okay. At the point of incorporating, because for you to operate, even if you're bringing foreign capital or relocating a foreign company, you have to incorporate in Kenya. Now, in the instruments of incorporation, one of the requirements is the declaration of who the ultimate beneficiary owners are. And I'm not sure the regulators are going to back down on that requirement. Where it may boil down in a very serious way is where there is a requirement to have individual persons rather than corporate entities as the ultimate beneficial owners. But then the Business Registration Service is able to give guidance in terms of how to make that declaration of who the ultimate beneficial owner is for the Kenyan incorporated entity.
Okay, that certainly helps.
I know where you're coming from. You're coming from an old regime where companies refuse to lift the veil. You're not able to see who the characters are behind each company. And I think the global best practice now is to have all those declarations coming up so that then you do not have shadowy characters taking economies at ransom, and they do not want to be known.
Let's get back to the incentive question, because we're talking about all these benefits that accrue to individual enterprises. We've spoken about the tax benefits that firms would enjoy if they set up shop in the SEZ. But what about the infrastructure and the facilities that are needed to support their operations there, right? They need utilities, they need power, they need water. You need to be able to ensure that these facilities are available on site. If an enterprise is set up with a view to providing those infrastructure and support facilities, will they also enjoy the same benefits?
It's a good question, Ramah. One of the obligations imposed on the SEZ developer is the obligation to establish and build the necessary infrastructure, including power, ICT, water, good roads, drainages, and all that. But in terms of utilities or infrastructure that is directly goes into the business, like power, for example, it helps to clarify that the power bills within a special economic zone are actually value-added tax zero rated. I know this is hitherto unknown, but your power bill as an SEZ enterprise will be 16% cheaper. And that's one of the incentives that goes out there to tell companies, look, come here, don't fear our power bills. You come into the SEZ, forget about what you read in the newspapers and in the media outlets, your power will be cheaper by 16%. That's a good enough, especially for companies that are power intensive. But other than the cost, Ramah, in the course of development, the developer also has access to facilitation that makes it possible to install reliable utilities. Just by being a special economic zone gives you special audience, even at the grid operator Kenya Power, so that you're able to address the questions of power reliability. Because for some of the big companies that are coming to us, they're not even bothered about the cost of power. They want to know whether that power supply is reliable and whether you have multiple sources of power with different fault paths, so that you not just address the question of cost, you're also addressing the cost of reliability of that supply. At Two Rivers, at TRIFIC SEZ, for example, in a bid to prepare our environment for all this, did you know, Ramah, that at Two Rivers, we have 9 fiber optic terminations from 7 international companies? It's like a buffet of fiber. So you're able to choose 2 main, 2 redundant, 1 main, 5 redundant. It's highly unlikely that you will suffer an outage on all of them. And all of them are serious multinational plants.
What about SMEs? Because I think one of the, I guess the sort of, well, pitfall is probably the wrong one to use here, but I'm going to go with it all the same. Because one of the pitfalls that sometimes will come up in these conversations is, we speak about special economic zones and we sort of presume that it's aimed at large companies that will be interested in setting up shop. But SMEs can also essentially take advantage of the opportunities under the Act, can't they?
Indeed, Ramah, that's one of the objectives of the SEZ. And about a month and a half ago, we launched a product within TRIFIC, which we are calling the Startup and Scale Up Program. And this is a program to enable small startups and small enterprises that want to scale up to enjoy the preferential environment that is a special economic zone, for them to first rise up in a bid to become more competitive on the global stage. Because you're selling services which you're not the inventor, you're providing consultancy services, you're providing some service to some clients all over, and you have the opportunity to expand and open yourself up to the emerging markets, even within the region of Africa. And we are saying, come, we will make it cheaper for you to do business, because the law allows you to enjoy cheaper cost of doing business within a special economic zone. We are saying, come, we will save you the amount of money you would have lost through taxation or through other avenues and channels. We are saying this money will be made available to you through the incentive framework of the SEZ, for you to be able to buy raw materials, buy more services, be more innovative, recruit more staff, enhance on your technology, improve on your offering, especially where all that requires cash. And this is an opportunity that TRIFIC SEZ is offering the small businesses. But I dare say that at TRIFIC SEZ, we have made it possible, even for the smallest of the companies that want to start somewhere, to come in. Ramah, did you know that even with a space as small as 50 square meters, if that is your requirement, you can actually get that at Two Rivers International Finance and Innovation Center. It's coming and will give you the space you require, however small, if only that serves to provide you an opportunity to start somewhere, scale up, and go into something big. We are told now, but we know, and from photos, we know there was a time we were short. So that's our reasoning. We know you can start small and you can actually become bigger.
Are there any interesting success stories you could share with respect to companies that have set up shop in special economic zones in the country, and that's been a key contributor to them really expanding the enterprise?
Ramah, the story of TRIFIC is interesting. Our first client at TRIFIC SEZ, I didn't anticipate your question, and I've asked for permission to disclose the name of the client. Our first client is actually a Kenyan company operating in Kenya, but struggling to firm up their presence in 14 African countries. So they came to us, we had a conversation, and we said, look, can we start somewhere to afford you the opportunity to grow and scale up and become competitive in the 14 countries that you operate? As we speak, Ramah, that enterprise is already operating within TRIFIC. And that enterprise, I don't think it could be happier than it is now, because an opportunity that was hitherto unknown to it is now available. And I am seeing they are scaling up. And I've also heard from Brian Mwao, my business development coordinator, that they're actually asking, what next? Where do we expand if we need to expand? Those are the conversations we want to hear. And this is not a make-believe story. This is a living example of a company that is just starting and is already seeing the horizon becoming broader and broader.
I want to turn this around and ask, okay, we've spoken about the application process. What do you need to get in? What sort of documentation do you need to deliver? But what about the exit process? Are there any tax implications that enterprises should be aware of if they come into the special economic zone? They've operated there for 5, 7, 8, maybe 10 years. And then at some point they say, look, the next stage of our growth requires us to be outside the SEZ. What sort of issues should they be aware of? And are there any tax implications that arise from that decision?
It's a very simple process, Ramah. At the point of exit, KRA does what I think they call the post-clearance audit. A post-clearance audit, just to ensure that your tax books are in order, to ensure that you do not have outstanding tax obligations. And for us in the services sector, it is even easier, because very few enterprises have customs obligations to declare. It becomes a little bit more complicated when you are doing manufacturing or something like that, because then they have to come down and start checking all the raw materials you have imported, whether all of them have gone into production, whether your waste material has been properly accounted for, whether you have any bonds that have been executed or things like that. But for especially for services, SEZ enterprises, it's so easy, because it's just a book check that you are actually okay, your tax ledger as a company is okay, and you move out. And remember, at the beginning, I was talking about the ease of exit. There are many methods of exit, and at the point of exit, you can choose either to sell the company or to sell your shares. Whichever method you go with, you need to know that your exit will be painless. Painless in the sense that if you sell your business and there's a gain, you're actually exempt from capital gains tax. And that has been a point of comfort for companies wanting to come in. Because when they are moving their investment out, then the taxman will not be bothering them with the capital gains tax and all that. If you choose to sell your shares, the trade in share, the selling of shares attracts what we call stamp duty. Again, you are also exempt from the provisions of stamp duty, which means the value of your shares will define what goes into your pocket and how heavy you're going away looking. And it's as simple as that. Even in terms of expatriates working into the country, and I mentioned earlier that it's a serious pain point where a company wants to understand that if they come, they can bring their expatriates. The SEZ Act allows you to bring in up to 20% of your permanent employees to become part of your workforce. Now, when they come, they get entitled to work permits. And I like defining this entitlement. In the ordinary sense, when you apply for work permit, there is discretion on the part of the immigration officer to decide whether to give you or not to give you. But if you are an SEZ worker, then you get entitled to that work permit. All you do is supply the supporting information and pay for your work permit, and you get it. And that is the certainty of the work permit that the SEZ environment provides, which gives comfort to a multinational coming into the country, knowing they can bring their CFO, they like protecting their money a lot, they can bring their technical person, they can bring their managing director, they can bring every other technical person required to safeguard the investment. And that's a serious pain point that the SEZ framework has addressed.
We've spoken about the tax incentives in terms of, what sort of taxes these entities essentially exempt from. And in fact, looking at the Act itself, it's actually kind of hilarious. Just looking at the ones that, you're exempt from. Stamp duty is one, provisions of the Foreign Investments and Protection Act, provisions of the Statistics Act, payment of advertising and business service permit fees to respective county governments, which I know has been a massive pain point for a lot of enterprises, manufacturing licenses, and so on and so forth. But let me flip the question around. What taxes do I actually pay? Or am I obliged to pay if I'm operating within the SEZ? Because I presume, for example, income tax obviously might be one of those.
So I'll answer that question in two ways. One, and earlier, when I was talking about the incentives, it's just an area we didn't clarify enough, the protection of your profits. Now, Ramah, from your business, because I know you have several, you pay corporation tax of 30%. If you move two of those out of those many, you've moved two of those into the special economic zone. The SEZ Act allows you to pay 10% corporation tax for the first 10 years in a bid to allow you to retain more profits for purposes of expansion and for purposes of your other business operations. So you pay 10%, which is a massive saving from the 30% you would have paid. The taxman is also saying that the Act says after 10 years, you now pay 15% from 10%. And at the lapse of the 20th year is when you start paying like everyone else. And nothing, and I dare say this, nothing prevents you from operating in Kenya, moving your investment in Kenya for those 20 years, and then negotiate either your exit or you sell your business or something like that. So that what we are saying is that your profits are protected. The only tax, to answer your question directly, is just that you pay your 10% corporation tax, and that will be fine. However, questions have emerged. If I am an employee of a special,
that's where I was going next.
of a special economic zone enterprise, do I enjoy any incentives? Now, unfortunately, you don't. The license is issued to corporate entities, not to individual persons. And so the benefits you're reading and we have been talking about are benefits that go to an entity incorporated as a company in Kenya. But why aren't there any incentives for the SEZ employee other than the work permit? Ramah, if you look at the reports of Kenya Revenue Authority in the last, I think, 2 or 3 years, you will notice that the quantum of PAYE, pay as you earn tax, has actually been more than corporation tax and VAT put together. And this is a narrative we have to keep telling even investors who come here. What is innate for the government? So when government gives you all these incentives, what is it getting in return? In essence, this program, Ramah, is sort of a method of importing taxpayers. So you've been operating in France, in Germany, in England, in whatever. So you come here, you start working here, you get a work permit, you get a Kenyan tax pin, you start paying your taxes in Kenya. And I dare say some of the salaries we've seen Ramah is of expatriates coming here, and the tax paid by one person is equivalent to what about 10,000 Kenyans pay. And this is the benefit to the economy. And Kenyans need to understand that the SEZ program is not a tax evasion scheme. It's actually a very clever effort to try and bring in more taxpayers into the country so that we can expand our tax bracket, so we have more people paying tax. So the 20% waiver or the 20% incentive given to the enterprises where they pay 10 instead of 30 is actually insignificant compared to the net gain that we obtain through the PAYE regime.
All right. And we're essentially coming to the closing end of the conversation, but there are two questions here that I want to take from the audience. The first, someone's asking, are there opportunities for US citizens with a visa who are looking for viable internal business partnership to leverage the benefits from being in a special economic zone?
Yes, Ramah, very quickly, I will take that. And we know that many people are very careful about bringing their investments here. But at TRIFIC, we are launching a special product, and this is still ongoing regulatory approval, where we will provide an opportunity for you with your money, and you do not want to open your company or your business, to put in your money through a capital market authority regulated instrument. You put in your money and you earn your money in dollars. We will be able to speak about that when the regulators are done with the approval process. Yes,
do you have any timelines on when hopefully CMA might get back to you on that to give you approval?
The entire process should be completed by the 31st of March next year.
All right, fine. 31st of March. I'm putting that in my calendar. I'll be back to you so we get some updates on how that product is working on. There's a second one here that someone's asking if the exemption on withholding tax is available on the import of services and intangible goods as well.
Yes, so when you import services, Ramah, one of the prejudices you suffer if you are not an SEZ is to the inclusion of the reverse VAT component, where you're importing a service and there's a VAT obligation for the inclusion of that component of tax on what you're importing, in addition to having withholding tax on that import. Now, when you are an SEZ entity, you get exempt from those two categories of taxes, and that makes your imported service to be about 36% cheaper as opposed to when you were an SEZ. And that the 6% arises from the 16% reverse VAT component and the 20% withholding tax component on imported service. So you get that off your price, and your imported service will be cheaper by 36%.
All right. Let's see. What is the one key operational risk that a business owner needs to keep in mind, just in closing? If they've been listening to this conversation for the last hour and they think, okay, this looks interesting, this looks like it's a worthwhile investment to make, what are the key operational risks they need to keep in mind before they knock on your door and say, Justus, we want to move here, what should we keep in mind?
I don't know which one I would pick, but let me just go with one, Ramah. And this boils down to the integrity of the application process. I would ask those who want to come into the SEZ to avoid the temptation of thinking that they can come, get a license, sell services to Kenya, but in the application process, you said you're actually exporting services. The truth of the matter is, for all the services you sell within the Kenyan tax territory, the law requires you to pay all the applicable taxes. So you can't hide from it. So at the point of application, we ask for forthrightness, truthfulness, and faithfulness. If you are economical with the truth, I won't say when you lie, when you become economical with the truth, then it will bite you at the point of tax declaration, because KRA will come for the taxes that are due and payable. So I'd ask people to just, on this one, on the SEZ program, is a straight line. There are no corners, there are no dark corners. It's got to be a straight path.
Yeah, so we're essentially coming to the closing end of this webinar. But Justus, if people want to make applications, how do they get in touch with you and the team at TRIFIC?
So number one, the first port of call is go to our website, trific.co.ke. You'll get us there. Alternatively, reach out to me through any forum. Email me, j.kariuki@trific.co.ke. Get me on LinkedIn. Get Brian Mwao, b.mwao@trific.co.ke. The emails are all on our website. Get to Breda, our CEO, b.buddy@trific.co.ke. Get to anyone affiliate. Get to James Moria, the group CEO of Centam. Send him a message on LinkedIn, anywhere. Any platform you see, just send us messages. Talk to Mikhail Agina, our head of legal and tax. Talk to friend Muremi, get him on LinkedIn, send him a message, reach out to him in any way. Talk to Martin Mumo, our tax manager. He'll be able to guide you on any question you have related to a special economic zone.
Indeed, it's going to be a fairly interesting series of conversations. And of course, in addition to all of that, one of the phone numbers that anyone who's interested can actually call. There's one here that's I've just been given, +254 709 902 400, +254 709 902 400. I'm seeing there's just one more question that's coming in on the Q&A session. Justus, you have room for that?
Yes, I have room for that, Ramah.
Okay, so this is from Molebatsi Mwagi. How does a special economic zone address the lack of local specialist skills which potential investors may require?
So at the point of entry, Ramah, we do inquire from investors whether they require specialist skills. And TRIFIC has taken a step forward to develop collaborations with professional associations who are able to avail the requisite skills that are needed by any of these incoming investors. We have a very working relationship with the Institute of Certified Public Accountants. We have a very working relationship with the Financial Analysts Association. We have a very close working relationship with the Law Society of Kenya. And we've made deliberate efforts to just create these collaborations for purposes of ensuring that where a skill is needed, we get that skill. However, we also have on board within TRIFIC, luckily, clients whose job is in HR consulting. So if you require a skill that becomes unavailable in Kenya, we have HR outsourcing experts within our ecosystems who will hunt for those skills wherever they may be on the globe and bring them over to you. And thankfully, because of the incentive on labor mobility, whichever skill we require and is not available around, we are able to get them work permits through the SEZ program.
All right, perfect. I think we've taken up an hour of our potential and future clients' time. So I do need to bring this entire session to a close. But Justus, do you have any last words, any parting words you'd like to leave us with before I wrap up the session?
Yes, Ramah, thank you for the closing, for the opportunity to just make a closing remarks. One is to thank everyone who has taken time to be with us for this webinar. We hope we've been able to address most of your concerns, if not all of them. But secondly, It is possible that you're seated there and you have questions and clarifications you wish to make and you didn't get the opportunity to ask, or you are not sure how to frame it. Get in touch with me, either immediately after this webinar or at any other time, and I will be able to address you at your point of concern and at your point of need. It's a pleasure having you.
Asante sana. Thank you very much, Justice. And just, of course, to buttress what he's saying, some of those places where you can make more inquiries, b.mao@trific.co.ke. Head over to the website, www.trific.co.ke. And of course, if you'd like to, pick up the phone and just call someone and talk to a human being on the other end of the line, +254 709 902 400 is the number that you should call. Thank you very much for your time and your attention. In the last hour, we've been having a conversation on how special economic zones might be of benefit to you, to your investors, to your enterprise, with Justus Kariuki. He's a Chief Operating Officer at the Two Rivers International Finance and Innovation Center and Special Economic Zone. My name is Ramah Nyang. Thank you very much for your time. Have an amazing Thursday.
Thank you.